Welcome to the virtual roadshow series presented by Channelchek and Noble Capital Markets. Of the 6,000 small and microcap companies listed on Channelchek, today we're featuring Comstock Mining, NYSE ticker symbol LODE. Research coverage of Comstock Mining is provided by Noble Capital Markets. Noble is a FINRA-licensed SEC-registered broker-dealer. All Noble research is available on Channelchek. Following the formal presentation, Mark Reichman, Noble Senior Research Analyst covering Comstock Mining, will ask our presenter a selection of the questions received during the broadcast. And now, here is Corrado de Gasperis, CEO of Comstock Mining, to make the presentation. Corrado, take it away.
Thanks, Chris, and welcome everyone to the Noble Video virtual conference. Very much appreciate your interest in Comstock Mining, and I'm going to give you a very good overview. And as Chris said, we'll circle back to Mark after the prepared remarks for some really good Q&A. So Comstock, our biggest claim to fame is that we've consolidated an entire district, literally a historic world-class production district that in the late 1800s to the early 1900s produced almost 200 million ounces of silver and over 8 million ounces of gold. It's based in Nevada. It's within 15-20 minutes of Carson City and about 30-35 minutes from Reno. The consolidation is represented in this slide by essentially all the purple and all the hash marked areas. So you see about 10 square miles of properties, with the very, very northern tip being right in Virginia City, Nevada, and then what represents essentially a 6-mile contiguous mineralized trend that we own or control all of the properties. The one property we no longer own is the Lucerne mine, of which we retain a very, very strong stake in, and I'll explain that in a minute. When we think about the value that we drive from the district geographically, we break it into 4 parts. The first part is the Story County targets. And as I just mentioned, we sold one property, the Lucerne mine, which shows up right at the center of this map. And Tono Gold, which is really a strategic partner with us, has acquired the Lucerne mine, but we still retain a royalty on the mine. We retain all of the infrastructure that represents the production capacity for that mine we own it, but we've provided Tono an option to lease that facility. And we also get subsidized costs on an annual basis for maintaining that facility for that production. To the north of that, we have some of the most historic and some of the richest mineral claims, both in what we call the Gold Hill targets, just north of Lucerne, and to the east of that in what we call the Occidental lode or the Occidental targets. Those properties have been leased to Tono Gold, and we've also retained a 1.5% royalty. In addition to the 1.5% royalty on both Lucerne and those properties, certain of the claims on the Comstock lode, we also have an additional 4% royalty. So our royalties relating to some of the richest parts of the district are very, very strong. Tono has recently announced, and I will walk a little through their drill program, their exploration activities that they are fully engaged in as we speak today. To the south, we have another about 3 of the 6 miles, frankly, of contiguous mineralized trend. And we call that the Dayton Spring Valley Complex, where we have a maiden resource. We had previously published under National Instrument 43-101 about 500,000 gold equivalent ounce resource. We are currently working to publish an updated resource. It might be one of the first, if not the first, that will publish under the new United States guidelines. That's being referred to not as NI 43-101, but as SK 1300. SK 1300 is the guidelines that has now brought the United States in much closer parity to all the major jurisdictions where resource and reserve information is reported through their regulatory filings. Canada uses the National Instrument 43101, and the SK 1300 standard that the US has now brought online is extremely comparable to that. What it means for us as a US registrant is that we'll be able to include our resources and reserves and geological disclosures in much better detail, in full detail, in our current filings. That means 10Qs, 10Ks, and S filing registration statements. Prior till now, that's been prohibited in the United States. So I think that the fact that US registrants can now include this incredible technical information in their filings will be great for investors, certainly, and just so much better in terms of market appreciation. The fourth component of our value driver is that production platform. We have a fully permitted production platform, crushing, processing, refining. It's been in place since 2012. It functions excellently, and we don't only have it for production of the mining, but we also use that fully permitted platform for the clean technologies that we're piloting, testing, and moving into commercial production. The most immediate, which we'll talk about in a few minutes, is Mercury. So that's the world-class district. That's how we are unlocking the value of all these value components, all in one 10 square mile contiguous platform. We realigned ourselves consistent with that platform. As Chris mentioned, we're listed on the New York Stock Exchange as LODE. We've been a registrant in the New York Stock Exchange for over a decade. Our stock trades very, very well. We have a good shareholder base, and we're looking to grow that shareholder base. But we also realigned the company legally so that we could better demonstrate the components of value that we talked about. So if you start at the left-hand side, Comstock Northern Exploration holds all those mineral targets in the north that Tono Gold is leasing. Comstock's Exploration and Development holds all those mineral resources to the south that we own and we're developing. Comstock Royalty is an entity that we just set up that we will look to as these technical reports start getting published here in the very near future to better delineate the value of this royalty portfolio that we have, which is getting quite substantive. Comstock Processing is where all of that infrastructure, the crushing, processing, and refining activities are held in. And so, and Comstock Processing is also where we launch the ventures with the Mercury cleanup business, because it's our processing and operating entity. So we've realigned ourselves with one purpose: to have total focus, strategic focus on precious metal-based activities, and that the assets can be aligned with the activities and hopefully allow us to better communicate the extraordinary amount of hard asset platform that we have and the incredible growth that we're driving from each one of those operating assets. When we think about our value, today we feel like we're tremendously undervalued. If we just went down the list of the Dayton Spring Valley complex, of the Lucerne mine, of the various Mercury cleanup systems that we're deploying, which in that regard we put a very, very low value today, simply because we're reflecting the value of those assets that we've acquired and deployed. That's not the value of the Mercury cleanup business. The Mercury cleanup business value is the tremendously fast and strong cash flows that it'll produce. So we expect that by the end of this year, when our stakeholders and our shareholders are looking at 2 and 3 units deployed, generating cash, then we'll start to recognize a much, much higher value. The Mercury market is not infinite, of course, but it feels that way. It's enormous, it's global, and we're getting inquiries almost constantly about being able to deploy our systems to help folks clean up their contamination. And of course, we don't only clean up the contamination, we're able to extract the gold that's trapped in that amalgam. So it's not only a self-sustaining, self-funding activity, it's a very profitable one. We're working on other technologies. The most exciting is the reprocessing of leachate materials. Similar to the Mercury business, it's a notion of taking previously leached materials. Cyanide leached materials tend to extract substantially all the gold. They don't do anywhere near as well with the silver. So our notion is to be able to reprocess materials, get all the silver, clean all the materials, just like in the Mercury business. We're profiting from gold and silver while we're cleaning up the environment. And we've retained, we retain royalties in many properties, as I mentioned earlier, and we also retain some ownership in a company that's acquiring our non-mining assets. And so we look at those values today. They're all supportable. They should be over 130 million. Our market cap's 37 million. So we feel like we're undervalued by at least 3x from where we're sitting today. Actually 4x from where we're sitting today. And none of that includes the fact that we have about $27 million of non-mining assets that we're monetizing. When you net our small amount of remaining debt off of that, you're looking at 22, 23 million of additional value. So clearly we're undervalued. Clearly the market is starting to recognize that as we're communicating it better, as we're making better and stronger progress. But that's not our goal. Our goal is to generate over the next 3 years $500 million worth of value. That number is not a swag. That number has been built from the ground up. And, it's not contemplating acquisitions. It's not contemplating new business. It's contemplating deploying, more Mercury systems and developing the mineral assets that we already have today. So we're very excited about that. When we look at our financial position, it's gone from a tremendous amount of liabilities, just a few years ago, having over 17 million of liabilities, to now being just about 5 million. Within a year, we will have no obligations. So we're on the very brink of wiping out our small residual debt that we still have. We're doing that by selling some of these non-mining assets. As I mentioned, there's over 27 million. So when we're through with this thing, it's not only a zero obligation and very strong financial position, but we should be sitting on $20 million of cash and cash equivalent. So this is accelerating. It's now happening, every day, faster and faster as we speak. So we're looking forward to the next 3 years, both from having a strong position and from the value that we're creating. As I mentioned, we sold the Lucerne mine to Tono Gold. To reiterate sort of the value equation for Comstock, we retain a 1.5% royalty. We put a value of 5 to 10 million on that royalty simply from the base business plan that they have, considering $1,200 to $1,300 sort of gold. So the royalty will obviously continue to grow in value just as the gold price has already moved up, but we also get subsidized annually to the tune of over $2 million a year to maintain the processing platform. That's what you're seeing in front of you in green. And we also we have received cash and stock, for the sale of the Lucerne. So we get a royalty, we get a subsidy, and we get cash. So we like it very well. And you see here the area in the Silver City LODE that Tono Gold is targeting to expand and develop. There's already a resource there. There's already a preliminary assessment of economics of putting the Lucerne back into production. And it also includes, interestingly, the southern part of the Occidental LODE. So you see just to the right of the Silver City LODE, the Occidental LODE, which also has a pretty meaningful amount of data. So it would not be surprising to us if Tono Gold was able to certainly publish a report on the Lucerne resource, gold and silver, but also a preliminary notion of some Occidental resource there to the south. The Occidental trend you can see in red continues north. It's ultimately about 2 miles. So it's a very exciting trend. The Occidental LODE is generally considered parallel to the Comstock LODE. As you can see to the further left top part of that screen, the Comstock LODE is where there's a tremendous amount of excitement coming out of Tono Gold, and is certainly coming out of us. If you focus in on what they're doing there, we show sort of a cross section. This is from their phase 1 drill program that they announced just a few weeks ago. And you can see sort of in gray blobs or gray smudges some of the old bonanzas from the Comstock LODE. And so most people that are familiar with the Comstock understand that there were 33 bonanzas on the Comstock LODE. The big bonanza alone in today's dollars actually at $1,500 gold would represent over $12 billion in mineral value. Tremendously big numbers. Would be greater than that, obviously, at $2,000 gold. But Tono has an incredibly interesting thesis. It's based on fact and it's based on data, where the old timers would chase into these stopes with a cutoff grade of over 50 grams per ton. Once they had developed the drift and they had chased those materials underground and had established their investment, that grade cutoff was lowered to 33 grams per ton. And for those that don't frequent the metric system, that's over an ounce. So what that says to us is that all these former bonanzas and all these former mine workings, which had no drilling technology, no geophysical technology, just the old timers chasing grade, and knowingly left behind grades below 33 grams per ton. So Tono is not actually saying we're going to find the next bonanza. I mean, they may, they could, but what they're saying is we're going after what we know was left behind. And those are extremely high grades. In fact, as we sit here today and you see the drill rig in the bottom lower corner of this slide, they're drilling a 2,200 foot core hole. There has never been a 1,500 foot hole drilled on the Comstock, let alone a 2,200 foot hole. And they're doing it with a tremendous amount of data. So we're very excited about what they're doing. As we said, we're paid through the lease and we're paid through a royalty. So we're very much rooting for some exciting news coming out of the Tono Gold drilling of the old Comstock lode. They're also going to be drilling Lucerne. They're also going to be drilling the Occidental. But right now there's a high level of interest on what these first few very deep holes are going to yield, and we're as interested as anyone else. If we move down to the southern part of the district, where Comstock also has the ownership, but also has not leased these properties and are developing them 100% ourselves, the southern part of the district is really starting here at the Dayton mine and coming all the way down to the lower part of the Spring Valley. So all this property here, is under our ownership and control, completely. And we had done historically some pretty remarkable older technology geophysics, if you want to think of it that way, original magnetic surveys, which were pretty comprehensive, going all the way down to the bottom part of the district. The dots that you see at the top part of this slide are the drill programs that we had already run. So we already had drilled and established a maiden resource. We did geophysics to the south, structural analysis, and it's important to say that the southern part of the district is different than the north in a couple of meaningful ways. But one of is that it's a really flat valley with a lot of sediment covering the surface. So in that regard, there wasn't a lot of visible mineralization for the old timers to chase like they did in the north, where there was a lot of outcroppings, a lot of quartz veins, a lot of obvious indicators of minerals. In the south, that was not the case. There was 30, 40 feet of sediment covering it. So I guess it wasn't surprising with hindsight that when we started to drill, we had an immediate discovery just 35 feet below the surface and almost 1/4 of an ounce per ton. So that's what got us excited about the Spring Valley. As we took those geophysics, as we enhanced the analysis, again using old magnetic technology, we hit on almost every hole, and the grades were remarkable. I mean, we had grades of 0.03, 0.04, 0.05, which is very exciting for surface mining, open pit mining. But then we had grades of 0.2, 0.3, 0.7, 0.8. Those were very exciting grades, very high grades. And what we did was we designed what we call a dipper pit. It's that little blue polywog that you see here, at the top of the screen. And we did it with a very, very high cutoff, meaning a very, very low gold equivalent price. The pit was engineered using an $800 gold price equivalent for the cutoff. And what we then did is we brought SRK in, and we asked SRK to validate, that little pit shell that we had created. and they did. And then we asked them to give us a view of how much bigger it could be expanded just based on what we had known to date, and they did. But using the small pit shell and using the $800 cutoff, in other words, we didn't re-engineer the pit to say how much gold would we get if we used a $1,200 equivalent cutoff, or how much would we get if we used a $1,600 equivalent. We didn't do any of that. All we did was put the $1,600 on the smaller pit, and then we put $2,000 on the smaller pit. And as you can see, we're looking at cash flows that already exceed 75 and 100 million respectively. So again, that doesn't count growing the size and engineering a larger pit based on a more appropriate cutoff, a more profitable cutoff. It doesn't include drilling and expanding the Dayton, which we believe has tremendous opportunity. And that takes us back to what we're just finishing up right now. We have launched a full-scale, three-dimensional geophysical survey that's done by helicopter. Now, this is relatively newer technology, and the difference between this technology and what we did previously is there's many differences, but the one that's just overwhelming is that this geophysical survey, as opposed to the last one, which was really more of a surface mapping, potentially giving us indications of up to 100 feet from the surface, which was productive for us because there was a lot of near surface mineralization. But this survey can go down to depths of 1,200, 1,500, potentially 2,000 feet. And so we're doing a full geophysical scan, of the lower part of the district, including all of the Dayton, all of the valley, and some of the peripheral areas surrounding it. And before we start drilling, we will be publishing and we will be highlighting the results of this geophysical survey, which remarkably only cost us about $60,000 to do the whole southern part of the district. I mean, literally one or two drill hole changes would pay back for this survey work. But we expect the value of this thing is going to be off the charts. It's not going to be about saving a few $100,000. It's going to be about a much more effective and more efficient drill program. So just to segue into the last part of the presentation, Comstock has always been a leader, in terms of social responsibility, in terms of environmental reclamation. We've gone above and beyond. And we did not do it in a charitable mindset. These are our properties. We control the entire district. We see that there's many uses for these properties, but without question, we took the lead. And because the old timers used mercury in the late 1800s, actually up until about 1907, and there was some residual mercury left behind, ultimately that found its way down into the Carson River. We had been a leader in terms of sampling, testing, analyzing all of that mercury, and ensuring that before we disturbed any soil, it was clear. We did that with the intention of being safe, being responsible, but ultimately it ended up in us being able to step in when there was an emergency failure of a state route. The state route is in the Comstock. The state route was built over an old mine shaft, and it was built on hundreds of thousands of tons of old contaminated mine dumps. And so we pulled out all of that old material, we sealed the shaft, and we moved the road over so that it wouldn't be built on top of a mine shaft, and it would be built to the right specifications on compacted fill. In doing that, we won federal and state awards for reclamation excellence, for mercury remediation, et cetera. And it really sort of put us on the map as, already having had the protocols, already having had the EPA permissions, already had a platform that we proved we could do this. And I think economically, it's important to say, we spent $6 million ripping out that road and sealing that shaft. We spent another $3 million putting the road, a brand new road, back into place. And then we got over $9 million of gold and silver out of that process. And so we expected to get some residual gold and silver. We did not expect that we would break even or even make a little bit of money. And that's what attracted the Mercury remediation team from Oro Industries and MCU to us. And so we now, as we sit here today, are operating the system that you see Brad, Tom, myself, and Paul standing in front of. This system is not a toy. This system is state of the art. It has 3 Mercury centrifuges. It has a state of the art patent filing on a Mercury reactor, and it has a fully integrated water purification system, and it has some of the most advanced and precise spirals in the world. And it's hard for us to imagine if you put mercury contaminated material at the front end of this thing in the hopper that sits about 20 feet above the ground up here, that by the time that material gets through all of that technology and all of that process remediation, that there's going to be hardly any mercury left in it. That's what we're proving right now on the Comstock as we speak. And in about 2 weeks, this unit that you're looking at, and this is myself, Chris Peterson, our Health, Safety, and Environmental Director, and Alexia Sober, our Mercury Market Manager, standing in front of a different unit. And you can see a centrifuge, a Mercury centrifuge right here in the middle of the unit. That unit was shipped to the Philippines and is due to arrive on October 15th. So we will have 1 unit up and running on the Comstock. We will have 1 unit up and running on the Philippines. And the Philippine project is remarkable in a couple of ways. It's one of the richest gold districts in the world. You know, that's one way. It's one of the most mercury polluted areas in the world. That's the second way. And we have the contract, and we've received 9 permits to clean up the mountain and the 27-kilometer river to really really not only clean up an ecosystem that's been contaminated with mercury, but also allow them to continue to operate with this clean technology going forward, so that they don't have to repollute this. And this is all under the umbrella of the Minamata Convention. In 2017, the United Nations and over 140 companies, led by also the United States, adopted the Minamata Convention to eradicate the use of industrial mercury, the use of mercury from industrial mining from the world. The Philippines is one of the leaders in implementing Minamata. We've worked directly and spoken directly with the US EPA, not District 9 out of San Francisco, who we work with directly here on the Comstock and who established all of our existing protocols, but with the policy group in Washington, D.C. and the State Department in Washington, D.C., who has a priority working with the UN to clean this mercury from the world. So we could not imagine being in a better place. We've launched the US Mercury pilot. That was in August of 2020. We've shipped the first international unit. We already have a joint venture with a Filipino mining company there to clean up Mount Dawawal and the Nabok River. We'll be shipping a second unit at the beginning of next year. I mean, there is the potential that we could have 5 or 6 units all along that ecosystem just in the Philippine project alone. We've launched, as you know, the geophysical survey, state of the art. We expect the helicopter to stop flying within the next day to be finished, and then we expect results to start coming in October, and we'll get results in October, but we'll be getting data for the next 6 to 8 weeks. This is an incredibly deep, incredibly technical method of surveying, and it's going to help us really recalibrate our drilling and expansion program, which our intention is to update that resource with an SK1300. We're actually going to have multiple SK1300s, and then that will give us a clear path as to the next drilling and expansion program for the Dayton Spring Valley complex, and then that will be followed by another SK1300. So we could easily see a progression of 2, 3, 4 technical reports that show the progression of not only growing the gold and silver resource, not only establishing gold and silver reserves, but ultimately a mine plan with a clear path to production and proven and probable reserves. So all of that is going extremely well. The Tono program has launched. They are drilling. These holes may be some of the most tremendous and exciting holes that are be up and coming. Hopefully, the data will start to come available in November. So we've got a lot of excitement, that's coming here. The company is starting to monetize some of our non-mining assets. We're a little bit ahead of schedule on some, and we're a little bit behind schedule on the other. But by the end of this year, we would expect the Silver Springs assets to, be fully monetized, and a meaningful amount of some of the Tono securities will be monetized. And so the balance sheet is accelerating in terms of its improvement. But as you saw, within a year, we'll have $20 million of cash and cash equivalent and no obligation. So I think we're out of the red zone, we're out of the yellow zone, and we're moving very quickly here into the green zone, when it comes to our financial position. So with that, I will turn it back to Mark for the Q&A. Mark?
Thank you, Corrado. I'm Mark Reichman, the Noble Senior Analyst who covers Comstock Mining. I'll be reading the questions submitted for Corrado's response. So the first question is, why did you sell Lucerne if it was so highly prospective, and why not develop it further as you are doing at Dayton and Spring Valley? Are there any plans to JV or farm out Dayton and Spring Valley?
No, that's an excellent question. So I want to say first that we are not in philosophy and in concept, we're not a seller of gold assets. Okay, we're very bullish on gold, and we're very bullish on these types of gold assets. Having said that, the Lucerne mine, we originally started mining Lucerne with some very, very near surface resources. There's a bigger resource there for sure. Everyone's aware of it. But the infrastructure and the development and the cost to expand it into the next phase was larger than we were originally hoping for. And so for us, it was a question of how do we maximize the return on a gold asset? And in some instances, like the northern part of the Comstock, where there's a meaningful amount of development and there's a meaningful amount of exploration and drilling, we felt that it would be better to monetize it, in Lucerne's case, the way we did, get ourselves immediate cash, get ourselves immediate liquidity, get ourselves intermediate value in that we own about 34 million, fully diluted shares of Tono Gold, and then get ourselves long-term option on the gold price through the royalty. So for us, it was very much a financial decision. Where do we want to deploy our capital for the fastest returns? Where do we prefer to have others deploy the capital to deliver us our returns? So, because the northern part of the Comstock, one drill hole of 2,200 feet, that's just awesome. There's nothing I can say negative about it. We couldn't be more excited, but it's going to cost, $300,000, $400,000, potentially $500,000 just to drill one hole. There's Tono's expecting to spend $7 million, $8 million, $9 million, $10 million, in the first phase of drilling. And so we positioned ourselves to be rewarded for that success with them, in many different ways. So it's kind of a long-winded way of saying we like Lucerne, we love the North, but from a capital deployment, capital return perspective, there are projects that we get much faster return for our smaller investment. In Dayton's case, we want to drill those holes. We want to develop that asset. We're not talking about tens of millions. We're talking about singles of millions. So we like that, spend $2, $5, $6 million to develop Dayton. And in that case, we'll have immediate feedback of growth of ounces. And if we have immediate feedback of growth of ounces, then our shareholders will participate that more immediately. And then we could, if it tells us that there's more, then we'll keep going and make it as big as it can be. In MCU's case, we deploy, a couple $1 million, and there's cash flowing within a month or two. So we're moving to, some more selective deployments of capital, but never in the sense that we don't like, want, or retain precious metal value. So I hope that was a clearer question, a clear answer to that question, Mark.
Next is, when will the results of the airborne survey be available, and what are your plans for drilling the Dayton resource and Spring Valley targets?
So the helicopter should stop flying within hopefully the next 24 hours. We think they're on their very last leg of the effort. We believe that we will get preliminary results, within a few weeks. And preliminary results means we'll get survey results of the surface reasonably quick, and they'll be meaningful also. They'll tell us things. But then over the course of then about 3, 4, 5, 6 weeks, we'll start getting layers and layers of results. And I would say, within, 8 weeks, the latest, we would have context and interpretation on all that. And so that will be shared, and that will be published. But then we would finalize our drill program based on all of that data, and we would look to publish a technical report that includes our existing resources of gold and silver, includes all that magnetic survey work and what it tells us about the properties, and a very precise drill program that will be designed in sort of finality. We already have a drill program, and we're looking for this data to help us refine it. And I would say that we should be drilling by the end of, and it would be weather permitting, but I would say by the end of the first quarter, very beginning of the second quarter. So, maybe the April timeframe. And then that drill program will have been communicated. It will have very precise objectives. And then you would see a lot of results, a lot of communication in the middle of next year. And then that would be followed by an updated SK 1300 technical report. And, the evolution of economics will occur over 2 or 3 reports, but there will absolutely be some economic analysis in that second report next year. So, reporting, a lot by the end of this year, drilling early next year into the middle of next year, reporting a lot, middle to the third quarter of next year, and it's just going to grow from there.
When will your non-core assets be fully divested, and does the sale of any of these assets require any kind of fairness opinion?
So the answer to the last question is no. We do have, and let me be very precise. So the Silver Springs assets, which we have a contract to sell for about $10 million, a little over $10 million, will be done, here in the fourth quarter. That will be done certainly before year end. So that's the first answer. The Dayton Ranch is now under contract, and it will be, the way the contract's written, it should be closed. It was a lease with a purchase, and it'll be closed within 2 years, although we're getting monthly rent now and revenue from that one. That was $2.7 million. The other non-mining assets are essentially the note receivable that we have from Tono Gold. That's $4.5 million. That'll be paid within the next 12 months by September of 2021. And then we have about $13 million of Tono Gold stock that we like. We're a strategic partner and investee, but that will just be monetized very, very responsibly, over a longer period of time. So, by this quarter, we're debt free with a bunch of cash. By a year from now, we're looking at that $20 million of cash and cash equivalent position with no debt.
Can you give us updates on MCU on Comstock? How many tons are you crushing, and when will it be at 25 per hour?
So MCU has a capacity of going up to 25 tons per hour on the Comstock. That's its full operating rate. The notion of the pilot is to start it, between 2 and 6 tons per hour. So 2 tons an hour, 4 tons an hour, 6 tons an hour. The objective of this pilot is not to run full and run hard on cash. The objective of this pilot is to prove unequivocally that at each step up in scale, we're cleaning out all the mercury and getting the gold in the mercury out of the mercury. The number one priority is to show very, very little residual mercury coming out the back end. That's the proof of concept. Then we ramp it up, 8 tons an hour, 10 tons an hour, 12 tons an hour, purely so that we can perfect the engineering such that when we produce a 100-ton per hour system, 125-ton per hour system, that those systems can operate at the same efficacy. So the most important news that people should be wanting to hear from the Comstock system is that when we're feeding mercury contaminated material in, that no contamination or very minuscule amounts of contaminations coming out. That's the number one objective. When that happens, this thing's going to explode. The Philippine unit, not that you asked that question, the first unit that was sent over was not as sophisticated in the sense of having all of the technology, embedded into one system. It was more of a sand and gravel unit that's been enhanced with mercury centrifuges and very, very precise separators so that we can run at 150 tons per hour a sand and gravel unit that's cleaning out the mercury as well. And it's designed for an area of the river where there's much less mercury. That's why it's going to be effective in doing that. But we're going to start building a second unit that's more similar to the one that's here in the Comstock, that we expect to ship in the first quarter of next year. So by first quarter of next year, you'll have the Comstock unit running at something less than full by design. So the answer to the question is we don't have a target date to get to 25. The target is to get to each level of increment with clean soil coming out the other end. That's the most important thing. When the unit reaches the Philippines, it'll be running at 150 right away. It'll be set up, it'll be tested, and then we're going to be running it full right away, because that's really a commercial unit looking to not only clean the sand and gravel, but sell the sand and gravel, as well as remediating the mercury and getting whatever gold we can get out of that. The second unit that goes to the Philippines will be in a much more polluted, mercury dense part of the river, and it'll be more like the Comstock unit, although at a higher rate of operation. We want to get some of the intelligence out of the Comstock unit before we start building that second unit in the Philippines. And that's really, Comstock units is important in every way, but it's the one that enables us to make all subsequent units bigger with the same assurances of getting the mercury out.
With respect to MCU, are there others doing the same thing? What is your advantage, and is the technology patented?
So we don't see anybody deploying a system as let's say as holistic and as mobile as ours. We don't see anybody doing that. We're patenting the system, of which the nucleus, the core of that is the mercury reactor. We don't see anybody having a mercury reactor, that does what ours does. And so we are patenting it. And then thirdly, what's really different, is two things. One, as I just said, we can deploy them in the field and sufficiently clean the mercury, get substantially all the mercury out so that the materials can be used for other purpose. We can get the gold out so that it's profitable. But what we can also do that we don't see anybody even talking about is, leave the system behind to continue processing clean materials. So we can process clean materials, not all materials. Not, we're not going to build underground mines using these systems. But when you have these oxides, these malleables, these alluviums, our system can clean them from day one. Not clean them. Our system can process from day one and profitably extract gold without using contaminated mercury or cyanide. So what I know what the UN and what the US likes about our system is not only can we clean environments, but we can provide a sustainable solution for artisanal and small scale miners who don't have that today. Their only choice today is to use mercury, and that's their only choice, then they're going to continue to do it. If they have an alternative, which is what we're providing, then there's a breakthrough. So we think it's not only good for cleaning up profitably the environments and the ecosystems, but we believe it's a prospective solution for the artisanal and small scale miner. So the market's just huge.
Well, Corrado, that is all the time we have today. Thank you for helping us get a better understanding of the company's story.
Thanks, Mark. We appreciate it very well. Have a great day.
This has been the Virtual Roadshow series brought to you by Channelchek and Noble Capital Markets. Log into Channelchek or subscribe to our YouTube channel to get the full catalog of roadshows and C-suite interview channelcasts. Register for Channelchek's no-cost premium content and receive notifications of new releases from both series. Thank you for joining us.